Hello everyone, welcome back to Just Invest Today, and in today's video we're talking about Alibaba and why Alibaba has been going through this crazy death spiral for 2+ years. We understand about the tech crackdown and how China is clamping down on all these technology companies. We understand that. Plus, we have so much regulations and so many people talking about how China is just uninvestable. We already heard those stories, but man, oh man, we finally have the real reason why Alibaba has just been crashing for 2+ damn years. So from 2020 all the way from 2022, man, we've seen Alibaba keep crashing, crash again, get back up to 120, crash again. We just keep seeing that. We're just like, why is this happening? And we finally have the reason. But before we get into it, guys, please like this video, subscribe to my channel. Always providing you guys with so much new content, man. So click that like button, click that subscribe button. So let's get into this first article. Son ashamed to focus on profits after SoftBank logs record $23 billion loss. His bad vision fund suffered a $23 billion loss, and he's downright out of it right now. So this guy of SoftBank is just going through the worst in this type of environment as the macro sphere has been turning bad on technology companies. This $23 billion loss has been affecting him. So what do you think he's been doing? Because he owns stocks like Coupang, like DoorDash, public companies and private companies, but a lot of his investments have been going under. He suffered this $23 billion loss. So how is he going to make this up? He's been making this up by selling Alibaba shares, and that's what he's been doing. So for the last couple of years, he's been making contracts with his Alibaba shares to different banks, to different organizations, and basically collecting cash for those Alibaba shares with his contracts. So that's what he's been doing. His holding went from 23% to 14 or 12%. He sold 242 million ADS shares. That is insane, man. So we can understand why the Alibaba shares have just been going down and down and down and down. Like, it's amazing what SoftBank has been doing to his Alibaba shares. SoftBank, to reduce Alibaba stake, expects $34 billion in gains. So this is his cash holdings he needs after he's been suffering this huge loss in his fund. So this is what he's been doing, and now we really understand why we keep seeing Alibaba crash. It gains momentum, it just crashes again, gains momentum, crashes again. Because SoftBank has been just selling its shares like crazy. SoftBank said its stake in Alibaba was expected to fall to 14% by the end of September, down from 23%. As a result, SoftBank will change its accounting treatment of Alibaba and no longer count a portion of the Chinese company's profits as its own. Instead, Alibaba will just be another one of its hundreds of investments on SoftBank's books. The move is the result of SoftBank settling contracts it has made in recent years with financial institutions using Alibaba shares. In those contracts, SoftBank got billions of dollars in cash upfront. It promised its bankers that it would either pay back the cash later or give them Alibaba shares to settle the contracts. So SoftBank ended up not even taking back those Alibaba shares. It's just letting those institutions, those banks, have those shares. So it's just been giving off all those Alibaba shares into the market, and that's just been crashing the price like crazy because there haven't been buyers of the stocks because it's just selling them off. The institutions are shorting these shares, they're taking these shares at lower prices, so that's what they've been doing. SoftBank said it would hand over 242 million American depositary receipts of Alibaba shares valued at $22 billion at the Tuesday closing price. $22 billion. So Alibaba buying back all these shares have been doing nothing because SoftBank has just been unloading all of these shares back into the market. But look at this, and if they can hold the line now, we can see a resurgence in Alibaba, as Alibaba says primary listing in Hong Kong is approved. So this is amazing news. By the end of the year, we're going to have a primary listing on the Hong Kong Stock Exchange. So we're going to get actually Chinese citizens being able to buy more Alibaba. We're going to get more ETF money moving into Alibaba. So this is all really good news, but who knows what SoftBank's going to do with the remaining 14% in their Alibaba stake. Who knows what's going to happen with that, but this is very bullish news. If they hold the line of 14% in Alibaba, we can kind of assume this is the bottom at $90, and Alibaba can continue to buy back shares and people can go back into the market as China kind of gets better into the news, the kind of pessimism fades away, and people start investing more into Alibaba, especially in the Hong Kong stock market. Chinese citizens start investing more into Alibaba and their stocks in their homegrown country. So guys, please like this video and subscribe to my channel. Peace.